Should be live on YouTube, live in the virtual trading floor. Good afternoon, everyone. My name is Patrick Hawe. I'm an associated member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All trades placed by myself are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Please pause the video, read this disclosure. I appreciate that. Position disclosure, still no new swings for me. I really want to add some swings, but I'm just being extremely patient, and so far so good with that. I got a little worried there, back up at that 200 day, but so far so good. So let's get into it. So I, along with I believe many of you, maybe not all of you, but many of you, but I myself thought today was very tricky. Definitely difficult. Pat resolution is 4K. Is that good? It should be good. Should be good resolution. So yeah, I thought today was pretty difficult. So, let's go back to the morning, what happened, what we were expecting, what did happen, and what we can expect going forward. So coming into this morning, we had a small gap up, right? So let's take a look at the pre-market action. So small-ish gap up. I mean, at one point it was like over 0.5% or so. So it was, it was a gap up. It wasn't a flat open. But pre-market, we start trickling down a bit, I think either 8 or 8:30. Looks like it was 8 o'clock. I think some like German CPI numbers came out or something like that. It wasn't like direct CPI. I forget exactly what it was. But some numbers came out over in Europe. That took us down a bit. And then we just stayed heavy. Pretty much all day. Or at least for the morning. And then, again, pretty much every day for the most part, besides like Friday was really crazy, but these last 2 weeks in August, which, it's very typical that the market's pretty slow during the last 2 weeks of August, we've been getting these morning moves, and then the afternoons have just been like absolutely dead, literally into the close. So coming into the morning this morning, based off yesterday's candle, we said, okay, so the bears are saying this is just like a bearish rest day. That's it. Just, we're extended to the downside into 400. Time for buyers to show up. Buyers did not really show up. So bears are thinking yesterday is just an inside rest day. Bulls are thinking hope, more of like a hope than a thought, but bulls are hoping that yesterday might be sort of like a Morningstar doji in front of 400. But if that's the case, Morningstar dojis, when they play out, are almost always followed by, like an upside move right away the next day. You don't get a Morningstar doji and then flat for a couple days and then you break up, which, that can happen, but that's not an up move off the Morningstar doji. And that's kind of what bulls were looking for, and that was negated fairly quickly. I think where it was so difficult today was just the downside, so yesterday was a bearish rest day, but even after yesterday, we're opening this morning 403, 404. Our daily ADMA at that point is still up at upper 409s or so. So we're still opening with decent downside extension, not like yesterday's low with, the ADMA, yesterday's high, but still enough downside extension where we can still see we could still see a $4 or $5 up move and still be bear, still fail off equilibrium, still come back down. So I think the real difficulty was this daily extension that kind of I don't want to say like threw everything off, but you don't want to short this usually anyway. You don't want to short unless, there's something big going on, COVID or whatever. You don't want to short this much downside extension planning that you're going to get this much of a downside move just in that extension. I know it worked today and it may work in the future, but probability, statistically speaking, is that going to work more than 50 out of 100 times? I would bet no. I would bet more often than not, you might not get an up move, but you're not going to get another big down move. So I think that's where the difficulty was, but certainly not impossible to play. So again, pre-market, we're trickling down, pretty much lose all of the gap by the open. Very, very small gap here. That's filled within the first 15 minutes or so. And in that first 15 minutes, we have our VIX, our UVIXY, basing and then breaking up and taking out highs. So in the first 30 minutes, UVIXY takes out highs, SPYs take out lows, and it's pretty much a wrap from there. A little bit of a bear flag here, sideways for 15 minutes or so, leg down, sideways, leg down, until we had a nice little bounce here. Nothing special, honestly. I mean, a bit of a bounce, arguably the only real bounce here besides over here. Just like an extension bounce, which I'm happy to talk about later. But besides that, then we were just flat for the rest of the day. So, and that's it really. And then this close, and I'll cycle through the different indices. So SPY closing below 400, still extended to the downside, but an ugly close. Qs closing above 300, but not a great tail, still downside extension, but an ugly close. IWM, just an ugly close in general. Not really any special levels here. This 182, mid 182 area is okay, but just ugly closes. Pretty much the theme of today was a very bad, tricky day with ugly closes across the board. Pretty much since Friday afternoon, there really has, or Friday mid-morning, there really hasn't been buying in sight at all. Feels like for the most part, most of these intraday bounces that we've seen has just been short covering. There's been like no real buying going on. So, I mean, honestly, like that was really the whole day today. I guess we can take a look at other areas of the market as well. So like, let's look at oil, for example. Oil trickled down today. We have the, this whole Iraq situation going on. Obviously the Russia-Ukraine situation going on. Oil with a tail back up. This 74 is a bit of a level. You can see how many times it was an inflection point. The 74 is a bit of a level, so a tail off 74, but not really a great close there. And that led to XLE with, not the worst close ever, but closing below its 8-day EMA. Kind of breaking this momentum here. The trend isn't broken. The trend arguably isn't broken until this loses this pivot here. But still killing the momentum there a bit for energy. Let's look at financials. For some of the banks ticked green. Not great. Again, like nothing really had a good day today. So like not great days in the banks. Some of these banks ticked green towards the end of the day. But can you say this is a good candle or a good close for XLF? I don't think you responsibly can. Let me look at my sector watch list here. Yeah, so I got a watch list of the different sectors, and I might be missing a couple. But, I mean, look at that. Is the dollar perfectly flat? Is that accurate? The dollar was perfectly flat today. So look at this daily chart for the dollar, too. I mean, this looks basically as bullish as can be, for the most part, right? I just lost my watch list. There it is. Look at this dollar chart. I mean, you couldn't draw a more picture-perfect, uptrending from the bottom left to the top right of your screen, uptrending chart. This is just very, very beautiful. Failed to really break out this 29, I guess it's like 29.20 or so. Ticked above it by a penny or two and came back down a bit, but this dollar chart looks about as good as can be. And again, just going back to the sectors and just talking about like the theme for today, there is not one green sector. Not one. So really no relative strength anywhere that I can remember, and I could be blanking on something. Some of the growth names had some okay moves in the beginning of the day. But for the most part, they all rolled over. So honestly, overall today, a pretty bearish day in what has since Friday turned from a really bullish to a neutral, and then after Friday back to being a bearish market. I mean, you couldn't really get more bearish here. Just huge down day, bearish rest day, no buyers step in. And I think I titled the video today, like, no rest for the bears, because that's all we got. Just one kind of little rest day here. And then another pretty brutal down day with pretty awful closes everywhere across the board. The only, and I guess I'll mention it too. So the only positive, I guess, like, thing, for lack of a better word, that I started to notice today was VVIX, which we've talked about it before. This VVIX, the volatility of VIX, can tend to be a pretty decent leading indicator. And this VVIX, this is a 15-minute chart, did not make new highs today. This VVIX, the recent high is from yesterday morning, which is from the gap down that we got. And then you can see here, we didn't take out that high. So it is an inside day, as I believe Rich N pointed out for us. Inside day for VVIX, but not really a great close there either. How did this look into the close? Fairly flat. So not really a great close there either, but arguably some positive divergence starting to poke its head out here, with the S&P making a lower low and this not making a higher high. But that might be stretching it a little bit. And other than that, really nothing. I don't think there's anything positive to take away from this day or this market in general. It kind of sucks to say, but it is what it is, and that's what it is. So moving forward, what are we looking for? Let's take a look at our weekly chart real quick. I'm curious what this is starting to look like. Yeah, that's ugly. That is ugly. Not really any downside extension on the weekly either, or anything like that. So the weekly candle's not looking too hot. So where does this leave us going forward? I think it's tricky still. And overall, if I had to pick bullish or bearish, I would definitely pick bearish, right? So we got this 400 level. I don't think bears need to hold this 400 because of the downside extension. And that's what makes this so tricky, is this downside extension that, we get downside extension, a rest day, so the extension gets a little bit better, and then we just come down again today for even further downside extension. So where do we go from here? Honestly, I'm not too sure. It definitely is starting to become more of a downtrend again. It's like a mini downtrend coming off of a strong uptrend, which is coming off of a much bigger downtrend. So it's tricky for sure. I'm not trying to say like this is easy, just short here, buy here. It's tricky. I think where we go from here is, if bears are really going to be strong, I don't think they should be able to get us back above this 405, this high right here. It depends how we gap tomorrow. It always depends how we gap, right? So we'll see how we gap tomorrow. But as long as we don't break 405 tomorrow, I would think by the end of tomorrow, this ADMA is going to be decently close to this 405, where you don't want to see bears break above that. And again, I don't think this 400 isn't good enough because of the downside extension. So if you're a bear going forward, you really don't want to see SPY getting back above this 405, right? In terms of how we gap and where we go tomorrow, I think it's tricky again with the downside extension, right? So you got 405. Bears obviously don't want to get back above 410, but the way there's been like literally no buying today, yesterday, and Friday, it's hard to even see that being a possibility unless we get some news that comes out, or the VIX is just clearly puking out and dying away, and people are selling their hedges and shorting the VIX and everything like that. So bears, you're looking real. If you're a bear and you're short, you're looking real good. Just keep chilling, keep riding this stair step up, elevator down, keep riding this elevator down. You wouldn't want to see it back above 405, definitely not back above 410. If you're a bull and you're looking to buy, that's where this gets a bit trickier. Because this downside extension is decent extension, but it's certainly nothing where I feel comfortable coming in to buy, because this could easily downside extend to 390. So that leads me to what to look for if you're a bull. So going forward, I think bulls, let's see. And I mean, the tape's been so bearish, the flow has been so bearish, there's been no buyers really like the past 3 days or so. So maybe we get some mini downside capitulation. Maybe it comes tomorrow, maybe it comes later this week. It probably won't come at all, because that would make the setup a little bit easier. And this market has certainly done everything in its power to make things not easy for us lately. But 390, which hopefully you can clearly see is a fairly big level from all of this consolidation, resistance, finally break above it, come back down, retest it, holds as support. And I know it's not perfect, but roughly this 390 is a pretty big level. I would argue this 390 should be better. I think this 390 is better support than 400. Just eyeballing this chart and these technicals here. 400 was a bit, crisscross, kind of back and forth. Whereas this is clearly, resistance, breaks through, comes back down. Resistance that breaks out should be support. It was support. So further downside extension into 390 would be, I don't want to say like a layup long, but that would be a really nice setup. I don't know if they're going to give it to us, but that's one thing to look for, I think. So pretty much under 395 into 390. If this downside extension can keep getting bigger and bigger, 390 becomes less, and it's all about extension, right? It becomes less special if we just go sideways for the rest of the week and then, get pushed down or something like that. Other than that, if you're a bull, you can watch back above 400. It's going to be difficult to buy through 400, I think. It's going to be a bit of a tricky setup. But that's really I don't think you can step in and buy right here, because I don't think we're extended to the downside enough. We just lost 400. We lost 4,000 on the S&P. So, I don't think we're really at the next support level where you can come in and safely buy either. That'd be closer to 3,900. And then even the upside too, I mean, if we're buying back through 400, we really got to see the VIX coming back down. Like if this VIX clearly looks like, and I guess I'll just type up UVIXY for the ease of it. So this is like the 15-minute chart. Looks like 220 to 210 is really that area, maybe 240 here. So maybe we can watch 240 to 1040 to 1030. And if we're really cracking down through 1030, and it's not just like a little blip and back up like these tails here, like little blips and back up, but if we're really cracking down through there, then we can possibly look to buy SPY back up through 400. But I just have a hard time saying tomorrow buy SPY through 400, because I mean we're at 400 today. Where are the buyers, right? Like where are the buyers? If this 400 was a better buy, they really should have been stepping in today. Where we are on support mixed with the downside extension, they really should have been stepping in today. And that's part of what made today so difficult, I think. So again, I guess, just to recap for what to look for going forward, because I think it's very tricky and not very clear. If you're a bear, keep riding this wave. You probably don't want to see us get back above 405 and wait for this 80 MA to catch down to 405. If you're a bull, further downside extension to 390 should be a decent bounce buy. Otherwise, you can look for back above 400, but you really need the VIX to be selling off for that. And we do have some possible VVIX positive divergence where the VVIX made a high on the gap down yesterday and failed to break that high today despite the market making a lower low. To the point where this almost has me a little worried that we could just gap over 400 tomorrow. That's realistic too. If they gap us in over 400, which I could definitely see them doing that because that would just make tomorrow morning's setup extremely annoying where, we're gapping up. So do you short the common gap up? Maybe, but we still have downside extension. That'd be pretty tricky. So I think, though, that's really what to look for. Trying to think if there's anything else that I really want to mention. No, just the VVX divergence, 400, 390, 405 to 410. Yeah, I think that's it. So that's all I really got for today, which I don't know if that's like at all helpful or not at all helpful, to be honest with you, but that's just what the market's giving us, and I have no shame in saying I have no idea what's gonna happen tomorrow. I just can, lay out a couple scenarios, and if scenario one starts to look like it's happening, I'll know what to expect. If scenario two starts to look like that's happening, I'll know what to expect. Scenario three, so on and so forth. You don't want to make yourself, a ton of scenarios and give yourself what I like to call analysis paralysis. But you don't want to, you want to have some sort of foot map to go off of. And yeah, I think that's all I really got. I mean, it's an ugly close. We're still extended to the downside on the daily. This weekly is not extended to the downside at all. This weekly is just like kind of neutral-ish, bearish to neutral. Bearish because we're under these moving averages. These moving averages are curled down. So weekly is neutral / bearish, and this daily is bearish, but extended to the downside. So I think it's a pretty tough setup here. So yeah, I mean, we'll see how they gap us tomorrow. If they gap us down at all, if they gap us down decently, either a flush into 390 or back up through 395, I think is a good play. I'm not sure if we're gonna get it though, but I think either back up through 395 or versus 390, I think will be good. And otherwise, maybe back up through 400. But if they gap us up over 400, that's tricky. It's going to be totally. If they do that, if they gap us up over 400, and we do get some scenario where, like, I think 402 has been a bit of a level, a little bit, right? Like, we bounced off 402, tried to base 402, and then even today had like a tiny little bit of bounce off of 402. So like if they gap, maybe they gap us up over 400, and then we go through 402, and while that's happening, no one's buying because it's like an annoying common gap up, but it's a gap and go, right? So maybe we can watch this 402. But yeah, I think that's all. And obviously I mentioned the dollar already, but this dollar looks really scary. So definitely need to keep paying attention to the dollar. And I think that's all I really got, which, again, I don't know if that's helpful or not, but I guess the theme is this is a pretty tricky and confusing market. So if you're feeling like it's tricky and confusing, you're certainly not alone. And many, many people who manage much, much more money than us are feeling the same way. So yeah, it's like a market with a bunch of participants that are just all confused, and everyone's just confused, and that tends to make for a bit of a tricky market, right? So yeah, that's all I got for today. Wow, I can't believe I just talked for that long. That's all I got for today. So happy to take anyone's questions, comments, concerns, complaints, anything like that. I know there was a question on extension, which I'll definitely go over in a second here, but if anyone has any quick questions, feel free to shout them out here and now. I'll check YouTube as well to see if there's anything there. Let's see. Hey Pat. Omar on YouTube is asking about Derek and if he is okay. Yes, Derek is okay. He just wanted he just had me do the meeting today, but Derek's totally fine. Um, in fact, he's doing pretty good. So yeah, Derek's good. What are you primarily? Another YouTube question. What are you primarily trading futures? No, I primarily, as well as for the most part in our room, equities. I definitely watch futures, mostly just ES and NQ, because I think futures, like the chart of futures, is more important than the chart of SPY. But that being said, high majority equities. So, if I'm trading ES, then I'll be trading SPY. But like Derek says, it's nice to trade equities because there's thousands and thousands of stocks to trade. So you'll have days where the market, and by the market I mean the S&P does nothing, and then meanwhile you got like some random equity like a charge point or something that has like an upgrade that day, and you can buy the upgrade. And there's usually, almost always, I would say pretty much always, at least one or two things to do, even on days when the market really doesn't do anything. So for you on YouTube, or just asked that, Trevor, mostly equities, Trevor, but nothing specific in equities. Like we trade everything, anything and everything from tech to energy to bio to Bed Bath and Beyond, to meme stocks. So pretty much anything and everything in the equity universe. Let me scroll up in the VTF here, see if I missed any questions. Yeah, how these earnings names do? HBQ, I think they lowered guidance. That's no good. I think Chewy lowered guidance. That's no good. So we had, I think it was like 2 earnings seasons ago where everything got destroyed. And then this earnings season, was it this earnings season? Like the first half of this earnings season, things were reporting bad numbers but getting bid up. And now that we're in the second half, it's back to, bad numbers are getting sold again. What else came out? Crowd looks like it's pretty flat. And then did this AMBA come out? AMBA down as well after hours here. So yeah, no good from the earnings names today for pretty much anything. Nothing good there. Scrolling up in the VTF. Do you make any meaning that the volume in this market drop is lower than the previous one? Like Friday was the ugliest candle of the year, but the volume in SPY wasn't anything crazy. No, Gabriel. I don't really look at volume too hard on a daily basis. Derek's pretty good at explaining the phenomenon of volume, but I don't, because then you just start to get into these like conspiracy theories that, I don't want to call them conspiracy theories, but just these like thoughts in your head that may or may not be true, probably aren't true, and you're most likely not going to be able to trade it consistently in a way where you can make money from. So like, you're saying the volume in SPY is a bit lower, which it should be because it's the end of August, so typically it is a bit lower. But, then you start to think, oh, like the volume's lower, so maybe this is like a fake move down and it's going to go right back up. And if you're thinking that, you're probably getting smoked today. So I don't really overlook at the volume. And usually when the market... I find usually when the market tops or bottoms, it's different than like a meme stock topping or bottoming where you have like that one like blow off day where the volume just gets insane. Usually bottoms and tops, if volume helps confirm it, is met with a cluster of volume bar days. It's usually not necessarily one day. Like, here's one day where it was really, really high. But, like, I don't know. It's usually, like, you can see this is, like, kind of like a cluster of higher volume days. It's usually not just one day signifies, anything meaningful. So let me just reread your question really quick. Like Friday. Yeah, so just know I don't make anything of it. I care more about price and price action. If SPY 400 was a fantastic buy, people aren't on vacation this week and gonna, come back next week and buy SPY 400. Like, the big money is gonna buy SPY 400 no matter what day, no matter what time, if that's a good buy. So yeah, I don't really, I'm not saying like ignore volume. I'm definitely not, because volume is very, very important, especially on the intraday case. But on the daily case as a whole, I don't look at it. Not that I don't look at it, but I don't take as much weight to it in determining where I think the market's gonna go. Like, I'm not gonna say SPY is gonna go up or down tomorrow because today's volume was 20% higher than yesterday's volume or anything like that. I just don't. And maybe it's true, maybe it's not true, but I just don't think you can consistently trade that information in a way where you can consistently make money for yourself and scale up off that. So, that makes sense, Gabriel. But yeah, Derek saying 390 also target for the Head and Shoulders. Oh yeah, I forgot about that. True. So this like 410 to 430. Yep, 20 points down. 390. Yep. So Derek's talking about, for anyone like on YouTube, we got like a potential Head and Shoulders here. 410 neckline. The distance from the neckline to the peak is 20 points, so your measured move is 20 points down. If SPY really extend, that'd be a nice buy on extension in 390. I just have a feeling this market's not going to give it to us. But I would probably have to step in and buy that day for sure. Did someone just upgrade SoFi? I have no idea. Derek saying it only moved up 3 pennies. Any thoughts on Oxy? So let's take a look at these other energy names real quick. Oxy, for the most part, usually looks better than the other names. That COP is nice. Usually looks better because you got the whole Buffett news in it, right? But you always got to look at oil when you're looking at these energy names. Always. We've seen very many times this year a down market and energy is strong. And energy is not just magically strong because when the market goes down, energy goes up. Like, energy names are strong because oil will be strong that day. Those energy stocks are much more, maybe sometimes this is true, maybe it's always true, maybe it's not always true. But for the most part, what I've observed this year is those energy stocks are way more correlated to oil than they are the market. And we have seen that many times where the market is down on the day, but oil is up on the day, and therefore XLE is up on the day. So first I would look at oil, which I think I talked about this a little bit. This 78, or is it 70? Oh, sorry, 74. This 74 is a level, in my opinion. We tailed off of it, so a decent tail, but not great. Like, I would not call, some people might call this a hammer. I would not call this a hammer. I really, really highly prefer hammers to have a close higher than the open. So oil has a neutral candle in the middle of this range, which we've talked about this range, roughly 70 to 80 pretty much, if you want to stretch it the full way. So a range of 70 to 80, and oil's at 75. So you got a neutral candle in the middle of the range. There is really no edge to take away there. So that being said, just speaking technically for Oxy, it looks decent, but it's gonna be difficult for Oxy to have a real up move without oil. Like you're probably not going to just get a weekly uptrend in Oxy if oil and your other energy names are, flat to down. That being said, this 70 is certainly a level. Certainly a level. 71, a bit of a level. If I'm a bull in Oxy, I would highly, highly prefer this. I would definitely prefer this to not go below 71, so pretty much today's low. So I would prefer today to, possibly not be the pivot, but not go below today's low. And then maybe tomorrow you get like an inside day, and then you get an inside up off that. I would prefer this, if I was a bull on Oxy, I would prefer it not to go below 71. I would highly prefer it not to drop below 70, and there's no way this thing should drop below 68. There's no way this should drop below 68. So I guess my thoughts are, it's bullish, it looks bullish, you have a bullish chart, but you risk this oil, which oil doesn't look bearish, it just looks neutral. Like oil goes back up towards the top of this range, Oxy's probably going to be totally fine. So I guess just know your levels for Oxy, know what it shouldn't break, and then just pay attention to oil. If this USO starts to lose 74, those energy names probably won't hang in so well. So those are my thoughts on Oxy, which, I guess to sum it up, it looks good, but you're just subject to, global commodity risk for everything like that. So Oxy looks good, but if oil turns back down for, Russia or Ukraine or Iraq or whatever, then it's probably going to come down with oil. So looks like you asked that as well. Anyone know seasonality of Labor Day week? I'm not sure, Rock. I know September is usually pretty bad. If I had to guess, I would guess that Labor Day week is usually bearish, because the 2 days before, or the 2 weeks before Labor Day is like the end of the summer, but Labor Day week itself usually isn't like a big vacation week. Like kids are really back in school after Labor Day usually. So I don't know, but I'm just guessing that seasonality for Labor Day week is usually bearish. That's like literally a total guess, but someone could fact check that for me. Yes, the bullish dollar is bad for the markets, bad for earnings. Yeah, not great. All right, looks like that's all the questions. So I guess I'll just chat about. Hey Derek, Trevor has a question on YouTube. I see you commented on YouTube, Derek. Trevor has a question on YouTube that maybe you could address. But Trevor, I got my training from T3, which is a big prop shop. And a lot of my training actually came from the man, the myth, the legend, Derek. So feel free, and if you're listening, maybe reach out to Trevor on YouTube and you guys could have a little chat. Personally, I've been in this game for like 4 to 5 years professionally, but I was trading before that. But I don't really consider, I was trading for years before that, but I don't even consider it because of what I thought. Okay. Trevor, if you want to reach out to doldensmith@t3trading.com or reach out to myself, but Oldensmith, DOLDENSMITH at t3trading.com. We are, in my opinion, the best prop shop. But yeah, I don't even really consider what I traded before coming to T3 as anything, because I thought I knew a lot and it turned out I didn't know much of anything. So yeah. Okay, so I'm supposed to go over extension trades and how I go about them, and I guess there's two different really ways to go about them. I'll try to keep it quick and simple. So today we sort of called the market bottom, kind of. Did we make new lows after that? I guess we broke new lows after that. So extension trades. So why I really like extension trades is because there's very few facts that you can like draw. There's very few facts that you can draw from the market and by facts I mean like this has to happen. So like you can have a bull flag or a chart pattern or a moving average or something. But a bull flag does not have to break up. A stock does not have to bottom at its 200 daily moving average. A stock does not have to, trade straight down whenever a shooting star is put into it or something like that. But extension always corrects itself. And I'm talking about the market and bigger names in general. I'm not talking about some penny stock or some bio or something like that. I'm talking about more names that are correlated to the market. But just go to any of these names on any time frame, your daily, your monthly, your weekly, your 1 minute, your 1 second, your 5 minute. Go to any big name on any time frame ever and scroll out to the history of time itself. And you will see that the market always corrects itself to equilibrium. So it's a nice little fact to have, right? So that's why I really like it. Now, just because a name is just because you're extended to the downside doesn't mean you have to bounce back, right? Like there's two ways extension corrects itself, either through price or time. So it doesn't have to bounce back, but it's going to correct that extension. Like it's going to. It always does. Even when COVID 2020 happened and literally the world was ending, we still had extension correct itself. And I'm not even talking about the bottom too. Like we had pretty big bounces. Trading intraday during COVID was like insane. Like the S&P was moving 100 handles like every hour up and down. So that's why I really like it. Now, trading extension, I think there's two ways to do it. And one might be good for some people, one might be good for other people, and neither might be good for people. And it's probably only better for, I don't want to say more like experienced people, but just like newer guys. Sometimes you can get like, you don't want to get like the deer in the headlights where you're supposed to execute when it's scary and you wait and then you execute too late, or you execute too early and you're down money, and then when you're supposed to be executing more, you don't, and then you're kind of messing your trade up a bit. But, just to keep things fairly simple, you need, it's best on multiple time frames, right? So that's why during the day I have these 4 different time frames up, because I don't have to, like if I'm only looking at the 5 minute, I know that I'm supposed to look at the 15 and the 30 and the daily and all that, but in the heat of the moment, like you don't want to be clicking and doing all this. Like you just want to, glance at it and see it right away so you can get all the information. So multiple time frame, I guess like continuity, for lack of a better word, is super important. So that's, you don't want to be buying 5 minute extension when your 15 minute is not extended. You don't want to be buying 15-minute extension if, your daily chart is like breaking down, right? But when you get you get the same picture, the same signal, the same thing on multiple different time frames in a row, that's like really where the stars align. So it's coming into today and coming into this little bounce that we had intraday for the market. Basically, I was on the radio and I just remember saying, okay, like, maybe 398. I think it was 398 that we started looking, right? Yeah, so I'm like, all right, so 398, we're starting to get extended into 398. It's a bit of a level. And, usually you want to look around like whole dollars or half marks or so. But I don't, you don't just like, so you don't just stick a bid out. And if you do, you don't stick a bid out and put a stop loss in 10 cents below your bid or something like that. Because, again, another thing about extension, and this is why, like, this isn't like a beginner trade, because things can get really crazy. And if you haven't really seen how crazy things can get in crazy times, then you could get really hurt. But so like SPY's coming in to 398. We're saying, all right, maybe like back up through 398 or so. We're starting to get 5-minute downside extension. And while we're extended on the 5-minute, we're also extended on the 15-minute. We're also extended on the 30-minute. We're also extended on the daily. So we're extended down on multiple time frames. I know for a fact that SPY is going to see its daily ADMA again. It's definitely going to see its 30-minute ADMA. It's definitely going to see its 15. It's definitely going to see its 5. I know for a fact it's going to. Unless, the nuke gets dropped and S&P goes to 0 or something like that, which we got bigger problems to worry about at that point. Now, extension can correct itself through two ways, either price or time. It does not have to bounce straight back up. It can certainly go sideways. But even when it does go sideways, you still get these little bounces, right? Like this 5-minute chart right here. I mean, this is like no bounce at all, but even this quote-unquote no bounce at all is still a 50-cent bounce. It's not like SPY just goes to 400 and then is 400 bid by 400 spot 01 offer for 30 minutes before this breaks down again. Like, you do get the little bounces. So I guess to put it all together, when you're trading extension, you really got to have it on multiple time frames. It's got to be all the same. You can't be playing 5-minute extension if your 15-minute chart is like breaking down a huge bear flag or something like that. It doesn't have to be, because the market's not perfect, but it really should be 5-minute extension, 15-minute extension, 30-minute extension, and really even daily extension. And where really the stars align is when you get all those different extensions, and you're extending into a daily support level. Like, that's when like the stars align for me. Do I look at the tape? Yes. So I would say, I don't know if I don't want to say like ever, but for the most part, I like never, when I'm actually hitting the button to buy or sell, I don't think I'm ever staring at a chart. I'm always looking at the tape and the level 2. I'm looking at my chart all day up until that point, and I'm saying, all right, like, we're coming into 397, we're coming into 398. Maybe this flushes the level and then bounces back through. Maybe this holds, yada, yada, yada. But then when I'm like really getting ready to execute, I'm always looking at the level 2 in the tape. I'm never staring at a chart. I don't know if that's right or wrong. That's just how I do it. I don't know. Like, it helps you read tape a little bit. You really don't want to you don't want to overread tape and try to think you can read every turn from reading tape or anything like that. But if you do it enough, you can see. I don't know how to say it other than like you can just see buying coming in, or you can see buying not coming in, or you can see sellers stepping down. It's not like a picture perfect black and white thing to observe, because if it was, then there would already be an algo program to ruin it for you anyway. So like it's not a perfect thing. But yeah, so I'm looking at the tape also, and if anything, I'm like only looking at the tape when I'm actually executing it. Now, I believe, in my opinion, there are two ways to play extension trades, and again, one might be right for you, the other might be right for you, and neither might be right for you. And this is not like beginner stuff, but for me, when I'm doing extension trades, I don't have an out. Um, because I know that extension can always further extend, and I don't want to buy extension when, I don't want to buy extension. And now I'm just talking like personally. Like this is my side, and it depends what kind of trading you like to do, right? Like some things affect people differently than others. But for me, I get really like the thing that makes me most angry is when I'm right and still lose money. Like I'm totally fine with being wrong and losing money, because if that happens, I'm usually stopping out, and then the name is moving in that same direction where I'm saying, oh, like I had a good stop, like I lost whatever, I lost $100, I lost $500, but if I kept it, I'd be down much more than that. But I hate when I'm right and lose money, and you feel like you got shaken out or whatever. Um, so, and again, like I'm just talking like this is like how I execute it. So personally, when I'm taking these execution trades, I don't have an out, and I'm saying to myself, and I've talked about it on the radio before, where you got to look at where you're coming, how extended you are on your 5, your 15, and your 30. You got to look at where you're coming from. And it's basically just as simple as saying, okay, SPY has come down from 404, mid 403s to mid 396s. So what's that? Mid 403s to mid 396s? That's $6 or so, right? So SPY has pretty much come down $6 straight without $1 bounce. Oh, and I guess this is another uh, little added layer to add in there too. You got to know like what you're trading, and what I mean by what you're trading is the types of ranges that those names can put in. So for me, like SPY, I would trade SPY in 50 cent to dollar plus increments. Like I wouldn't be, I don't think you should trade SPY and try to make 10 cents. Um, it's not impossible to do, but you're just too small there. So like SPY, SPY, like I try to make 50 cents a dollar plus. Apple could be 25, 50 cents a dollar plus, an AMD 50 cents a dollar plus, whereas like a Ford or a Neo or like a T triple Q, that might be more like 25 cent to 50 cent increments. Like you got to know, I guess it's like average true range, although that's not something I look up. I just like observe it every day. But you got to know like how these ranges trade. And I say that because for me, when I'm buying or I'm executing extension, I'm saying, so for me, I don't use an out. And I do that because I don't want to get shaken out. And I find it more difficult to rebuy than to just be down money. And for me, I'm more comfortable being down money if it's part of the game plan. And that's why having a game plan is so important. And we talk about that ad nauseum, right? Um, so, like, say I'm buying SPY, and this isn't exactly what I did. I'm just like being hypothetical here. Say you're buying SPY mid 397s, saying to yourself, all right, SPY is downside extended on your 5, 15, 30 daily. It's come down $5 straight. I think the next dollar is up, not down, after it's come down $5 straight. But what happens if it does go down another dollar or two, right? You got to be prepared for that possibility. It's not probable when you're stretched that much. It's not probable, but it certainly is possible. And so if you're buying SPY with, $2, downside extended $2, I don't want to stop out $3 downside extended, because that's even more of an opportunity. You're even more extended to the downside. So for me, the way I do it is I say, okay, the next 50 cents to a dollar is up, not down, after coming down $5 to $6 in a row. I'll just keep the numbers simple. So let's say, I'm going to start with 100 shares and try to make 50 cents to a dollar. And if I perfectly pick the bottom and make my 50 cents or a dollar or whatever, then that's fine. I make a little money. If I don't get it and I do get that further downside extension, I can add more. It's part of the game plan. Because I know that this 5-minute extension is going to correct. I know it is. It's going to. You guys have heard me say it on the radio intraday, like, while this stuff is happening, like, I'm like, all right, like, this extension's crazy, this extension's getting crazier, but this cannot last all day. Like, it can't, it won't, it never has. I've never seen it happen. And again, I'm talking about the market. I'm not talking about some penny stock or some bio or something like that. So that's the way I do it. I basically start light and leave myself plenty of room to add in that further extension. And so when that happens, how does this go well? It goes well by, I either nail the bottom and make a little bit, or it keeps flushing and I buy more in the further flush, and then I'm trimming on the way up, and I had to be down a little bit of money to make a little bit of money, which sometimes that's what you got to do. How does this end poorly? The worst way this can really end is if you get a bear flag, which is something that you have to be able to recognize in real time. So, like, let's say you're buying this extension in SPY. You're still getting these little 50-cent bounces. You still might be able to, lock in 40, 50 cents or so for yourself. But recognize this extension, and then after 20 minutes, that extension's gone. So you can't be still that. Then you got to stop yourself out, and hopefully you can cover your risk, or you're light enough where you didn't get too heavy because it didn't further extend. So it's like not that bad of a loss for you, but you can't buy you can't buy this down move, because if you're buying this extension and the reason for the trade is extension, and then you don't have that extension anymore, the reason for the trade is gone. So that's one way to do it, and that's the way I do it, because personally I find it easier to be down money if my game plan isn't to be down money, but it's in my game plan where it's okay if I am. The other way to do it is, and that's basically doing it with starting with light size and being ready to add more size too. Like, say you're starting with 100 shares and your max size that you can really do is like 1,000 or something, then you can start with 200, add another 200, add another 400 when it's like puking and really extended and you're like about to pee your pants out of fear, but that's really when you should be adding size. That's when you really add. You can't, if your max that you really can do is 1,000, you can't start with 800 up here and then add 100, add 100. It's going to screw your average cost up. The math just isn't going to work. You got to start lighter and add heavier. So that's the way I do it. The other way to do it is to have your stops in and try to do it with size, and you got to be ready and willing to rebuy and try it like at least 2, 3, 4 times. And you should be able to do that, because if you're doing the math correctly, and let's say you're trying to make 50 cents to a dollar and you're only risking 10, 15, 20 cents or so, it's okay to get stopped out and lose 20 cents 2 times. That's losing 40 cents, because the third time when it actually works and you make $1, you still make 60 cents, 50, 60 cents or so. So that's the other way to do it, is having a tight out and being able to rebuy it. That's not the way I do it personally, and that's just like my comfortability and personality with trading. I find it much easier to be down money, knowing it's part of my game plan to buy more and, be trimming in that bounce. Like if you're buying this extension, I'm not waiting to sell perfectly at the 5-minute ADMA. Because what if this does bear flag? If this bear flag's down here, it's not going to bounce to the 5-minute ADMA. It's going to bounce 50 cents or so and then do what it did up here. But if I'm 50 cents in the money, like I can still sell some and make some money. So, if I'm buying some here and then I'm buying more here, I'm not waiting till this to sell. Like I'm already selling on the way up. So it's just me, I find it easier to have it in my game plan to add more on the way down versus risking getting stopped out on size and then having it like immediately tick up without you, and then you have to rebuy and you have to chase it up 20 cents or something like that. And then again, these are downside. Well, it's not only downside, I do it on the upside too, but they're extension trades. And, like Derek always emphasizes, all you can expect is a correction to the 5-minute ADMA. Is it possible that this turns into a 15-minute correction and it turns into a 30-minute correction and it turns into a daily and blah, blah, blah? Yes, it's all possible, but it's not exactly probable. So I'm not buying this SPY saying, all right, I'm buying SPY here because SPY is now ready to go back to the daily ADMA. I'm buying SPY here to try to make 50 cents to $1 to $2 or so because I know that SPY just came down $6 and is extended to the downside. And I think the next dollar is more likely up than down. And if it gives me another dollar down, the next dollar is just going to be more likely up. And then again, you got to know like the environment. Like if Powell just like comes out and says something and destroys the market, like you don't want to come in and buy like right after that because that's fundamental news that changes the market. So you got to have the know the environment that you're in. But like this morning, like nothing new came out. It's just a very, very weak market. And even these weak, today was pretty bad. Today was pretty weak, but you still had a couple bounces, with this extension bounce being the only bounce. So yeah, I'm looking at small time frame oscillators too. Yeah, I mean I do look at RSI on the 5-minute, but I don't need it. Personally, if you want me to be honest, I am looking at a 5, a 15, daily 30. I'm also looking at either, depending on how close it is to the open, a 1 or a 2 as well. Because if I'm executing, like the 5-minute I know is going to correct. So I know the 2-minute's going to correct. So what would I rather have as an execution dot? Would I rather have that in the 2-minute extension as well? Or would I rather be hitting that into the 2-minute ADMA? Like I'd rather do it on 2-minute extension as well because I know that the 2-minute is going to correct itself. So even that 2-minute extension might put myself 20, 30 cents plus in the money versus if you're only looking at like a 15-minute chart and then you see a 15-minute hammer come in, like by the time you're buying the high of that 15-minute hammer, I'm probably selling that to you. But I'm also, might have had to take some pain before that. So yeah, that's my rant on execution trading. Extension trading. I'm sure I got a couple questions here. Let's see. Andrew has a question. Pat, on FSLR, I exited on the 1510 bar. Before I answer this question too, by the way, I guess just like a word of caution. Just please be careful doing this type of stuff. Like, this is not something to do if you are a beginner trader, because it's gonna happen, and I've done it. You are gonna buy 5-minute extension, not realizing that the 15-minute isn't as good, or not realizing that the daily chart's breaking down or something like that. Or what usually, the mistake that I would always make is I would start too heavy too soon, and instead of starting with 2 to 400 shares or whatever, I'd start with like 1,000, and then when it's at the point where I should be adding 1,000, I'm only adding 200 because I'm like so scared, and then I'm getting a break-even small loss trade instead of like a nice win, where you shouldn't be adding 1,000 and then adding 200 and 200. You should be adding 200, another 200, and then like 400. Where when it's down here and you're like, oh my god, and you're like, oh my god, like it's like you get that like feeling in your gut where you're just like so scared. But like that's when you should be executing. And again, I like it because personally, it's just like the way I enjoy trading or whatever. Like personally, I find it easier to execute that than to wait for like sometimes you get these huge 5-minute snapbacks where you still have some extension, but you're $1 off the low, and then you're kind of like chasing that up move. I don't know. It's just me. Maybe I'm just a weirdo, but I just find it mentally easier for me to do that than to wait for. And I'm not saying don't wait for a signal. I'm not saying that at all. I'm just talking about like these like real big extension trades. I find it easier to do that personally than to try to chase off the bottom after the bottom already comes in. That's just me. So let me go back to the chat. Okay, I'll save your FSLR question. So Elliot, do I look at the tape also? Yes. When I'm actually executing, I'm pretty much only looking at the tape. So you can look at a 10 bar average true range. With the so you can look at a 10 bar average true range. I don't know. I mean, I don't look at average true range data. It's just like I just watch the market every day and these names every day. So like by this point, I kind of know. Like so, I said the like the increment amount earlier, because for SPY, for example, for like SPY, you should be trying to make 50 cents to $1 plus. You shouldn't be trying to make 10 cents in a SPY trade because the range is so big. It's just not. It's just like way too hard and way too small. So I'm not adding SPY every 10 cents down because I'm not trying to make 10 cents on SPY. Because if you're adding on every 10 cents down and all of a sudden this goes $2, this extends $2 even more than you thought it might extend, you probably are buying way too much, way too fast. So that's what I meant with like the average true range thing, where you don't want to be making 10 cents on SPY, but you probably don't want to be trying to make $5 on SPY every trade either. It's very possible to make $5 and over $5 on SPY, for sure, but I don't think you should be taking SPY risking $5 to make $5, right? 50 cents to $1 is decent. So in this extension, I might be saying, okay, SPY is down $6 straight. I think the next dollar is up, not down. I'll nibble a little here, and if I'm right, I'll make $1 on small size and, wipe my hands and take my cash and look for the next one. And if I'm wrong, I'll add some more 50 cents to $1 lower, and that's fine because it's even further extended. I started light, so it's really not that big of a deal. It's part of the game plan, and then I end up making, $1 to $1.50 or so. But that's what I meant with the average true range thing, where you just got to know like how these names trade and what these names can really look like when things are getting crazy versus when it's like a boring market. When it's a boring market, SPY might just be stuck in like $1 range or so. But when things can get pretty crazy, SPY can get extended by multiple dollars. So I guess that's what I meant by that. With the ads, are you increasing share size or doing a fixed amount? Yeah, it's share size. So, I mean, the right way to really do it is, and it can be a little scary, but the right way to do it, and you have to, and the key, and I see the next question, what about a time correction, which I already kind of just talked about. And again, this is why you don't really do this if you're like brand new, because you could get deer in the headlights syndrome and like not be able to, you might think, okay, like this is the extension trade, like let me get this bounce, and then maybe you trim a little 40 cents higher or so. Maybe you don't get a trim. Maybe you're going for your dollar move here, you don't get it. And so you're saying, all right, like I'm going for a dollar here, I'm going to add more every 50 cents to a dollar lower. So you start here because you're extended. You don't add anymore because it doesn't extend anymore, but it doesn't give you the full bounce back you're expecting. Over here, you should be stopping yourself out. You're buying this trade for an extension trade. You're ready to buy more if it extends further. It doesn't extend further. It doesn't give you the bounce you want. That's a time correction. You gotta be able to recognize this and get yourself out. I've made that mistake of not doing it where, like I was trying to like really learn this trade and perfect this trade. And I've made that mistake where I didn't get my dollar bounce and I was too stubborn to stop myself out and take the loss. And what ends up being, what could have been $100 loss turns into a $500 loss because you're too stubborn. And then, you're buying even more down here where instead you could have just stopped yourself out here, waited for more extension, and then started again down here. So what about a time correction for that question? You got to be able to recognize it. And I mean, it's usually pretty recognizable. Just you go sideways for 20 minutes here, this ADMA comes down, and you're not extended anymore. So that's the time correction question. So for Bill, so it depends, but it's just math. But typically, I try to do it in 1 by 2 increments, I guess, if that makes sense. And to say that's a bit simpler, if I'm starting with 100 shares and I'm planning to add more every dollar down, and again, it has to be it can't go sideways and then a dollar down because that's a time correction. But SPY things that are extended can get further extended. So SPY extended by $2 on the 5 minute. SPY can certainly be extended by $3, $4, $5 on the 5 minute. It's not impossible. So if I'm starting with 100 shares and I'm going to add more every 50 cents down, the right way to do it is really to start with 100, add another 100, and then add like 200. Because that's how you get your cost basis down. It's much scarier, but if you liked it when it was $2 extended, you should love it when it's $3 to $4 extended. And that's when it's the scariest, but that's typically when things are the best buy, right? So yeah, I hope that makes sense, Bill. And that's what would always be my problem with starting too heavy too early, is it messes up the cost average. If I'm starting with 1,000 shares and then realizing I'm wrong and only adding 200 and 200, like my cost basis is going to be way up here because the majority of my buying was up here, versus if I'm getting heavier and heavier, it just helps the average cost. And that way you don't need, like, you're playing this for a bounce back to the 5-minute ADMA at least, let alone maybe the 15 or the 30, but you don't need that. Like, oftentimes you only even need like halfway to make money. So yeah, I hope that makes sense. BBBY was a good one in the 30, yeah, for sure. How does the volume and or 1 minute chart factor into your extension trade? Yeah, so I'll watch volume on the 5-minute. I'll be watching either the 2 or the 1 as well. And just in general pickup in volume. I mean, let's see here. So this was SPY's 2-minute chart. Here's your time correction that ended up failing. another little 2-minute bear flag here, and then at this point, right? Like at this point, when things got really crazy, even on the 2-minute chart, SPY was extended by over $1 on just its 2-minute chart, let alone its 5, its 15, its 30, yada yada yada. Volume kind of picked up there, not too big though. But I'm definitely looking. If I'm executing in extension on a 5-minute, why would I not prefer to also have my execution on 2 or 1-minute extension, right? It just makes sense based on all that. But again, like what I started this whole rant with was it has to be multiple time frames. So don't go trying to short 1-minute extension or buy 1-minute extension only because there's 1-minute extension, because that 1-minute extension might be a 5 or a 15-minute breakdown, and you could really get hurt that way. So you cannot, I know Derek doesn't like the smaller time frames. You can't be looking at only one time frame ever. For whoever asked that, I think Rich just asked that. Do you wait for the 10:55 green candle to complete before you execute? Where would I enter? Sorry if I already said it. 10:55. Where's my mouse? There it is. 10:55. No. And that's, again, this isn't like beginner stuff, like fair warning. But no. I am not executing after. Sometimes I do. Sometimes it's better to wait for a signal to really execute. Sometimes you can find that signal on a smaller time frame, on a 2-minute chart as well. But I am not watching this. And this is just how I do it. I'm not saying this is the way to do it. I'm not at all. So please don't do this because you think this is the way to do it. But you guys asked, so I'm telling you. I am not buying SPY after this 5-minute green candle comes in. I am buying SPY most likely somewhere in this red candle because I am telling myself, okay, SPY is at 390, let's just call it 390. Where did this bottom? 396 and change. Let's just call it 397. I'm buying SPY at 397 when the 5-minute ADMA is over 399, so over $2 extended on the 5-minute. It's very extended on the 15. It's extended on the 30. It's extended on the daily. I'm buying SPY at 397, telling myself, okay, SPY just came down $6. It's extended on every single time frame. I think that the next 50 cents to $1-ish is up, not down, because this just came down $6 straight. So I'm not buying after this green candle comes in. I'm buying probably on this candle with a game plan that if I get another red candle and this extends even further, it's okay because I'm starting lightly and I can add more. And I can even add more if things get really, really crazy. Which sometimes things can look really crazy on a 5-minute, but on a 15 or a 30, they're not too crazy. Let me see if I don't really see any examples of that off the top here. But this 5-minute extension was also pretty crazy on the 15, was also pretty crazy on the 30, and we do have daily extension. So, and again, I'm not saying this is the right way to do it. I'm just saying this is how I do these extension trades. You can wait for a signal and buy with some better size versus the low. Or you can do it like this. But again, I'm not buying after this green candle comes in. I'm buying SPY at 397, saying the next 50 cents to $1 is probably up then down after this came in. I got all of my other information. And if this extends further to 396, I'll buy more. If this extends further to 395, I'll buy even more. And once this green candle comes in and you got people buying off this green candle, I'm probably selling it to you already. because, that's just the way I do it, because I just hate when you see this green candle and you buy off this green candle, but this green candle just took away 50 cents plus of that downside extension, and then there's a chance that this green candle just becomes a bear flag, and you get like in this range, the 5-minute ADMA comes down, and while you're buying this green candle, not getting much follow through, this becomes a bear flag and back down. I'm selling to you what you bought, and I'm chilling. But I'm chilling there because I'm like really putting kind of that bigger risk on. So I hope that makes sense, Bandit. I think Bandit just asked that. I hope that makes sense. And, I'm not saying this is the right thing for everyone to do, but this is how I do it. You guys asked. No problem, Sharir. How does the option flow that I skillfully, thank you, post factor? It doesn't, Rich. It doesn't really. So we're just Rich asking how the option flow factors into my extension trade. It doesn't. It doesn't at all. I'm trying to think of like a follow-up to that, but it really doesn't. I mean, it's nice if, I'm buying downside extension and then the call buyer comes in, like that's nice, but I'm not ditching, if I'm buying downside extension and a put sweeper comes in, I'm not ditching the trade. It doesn't really affect it at all, because I know for a fact that that extension is going to correct itself. It could do it in a very bearish way through time here. I'm well aware that that could happen. But if that happens, you should be able to recognize that after 10, 15, 20 minutes of no bounce, really. And then, you get yourself stopped out there. So, yeah, it really doesn't come into it at all, Rich. How important is a rush of volume to signal the turn up? It's fairly important. It's not a make or break. But if you watch the tape too, like if you watch the tape when you're extended like this, you'll see the tape will either get fat, for the most part, the tape will get faster and faster and faster. And like, say you're buying this downside extension and giving yourself room for lower to add more. If this were to extend further and further, instead of bear flagging here, the tape would probably get faster and faster and faster. And you got to have your bids in too. I meant to say that as well. You want to have your bids in. You don't want to be like timing this perfectly. So if you're ready, if you're buying here and you're willing to buy another 50 cents lower, you should probably have your bid in. You don't want to see this drop 50 cents and then try to put your bid in, because sometimes it can, like on the real flushes, it flashes back down. It flashes down and back up. And if you don't have your bid in there already, you're not getting it. But so you'll see it in the tape. If this were to extend further here, the tape would get faster and faster and faster, and then bounce back up. But I'm sure what happened here is the tape didn't get faster and faster. It just kind of printed 400 a bunch of times and didn't really speed up and ended up breaking down. So volume helps. It's not a end-all, be-all. The highest volume of the day doesn't have to be at the exact low of the day. But it's definitely, it helps. It helps. Watch the tape, though. Watch the tape. Don't get hypnotized with it. But I'm telling you, I don't think I ever look at, when I'm pressing that button, I don't think I'm ever staring at the chart. I'm looking at the tape and the level 2. Okay. I know Andrew had a question as well. Let me answer Andrew's question. Pat, on FSLR, I exited on the 1510 bar based on the volume, 3x recent bars, and the size of the bar. Pat, on FSLR, I exited on the 1510 bar. Recent bars. size of the bar. So I exited near the top and it pulled back as I thought it would. Then it moved back up. Andrew, were you long FSLR? Were you short FSLR? I'm honestly not sure. You were long and exited on the 15.15. This bar right here? Am I getting that right? $15.10. So this uptick, so you exited that. Well, yeah, I mean, the way you could have traded better is just by trailing. Don't just, like, get out for no reason. If your game plan is to get out, you're planning on this to go to 122 and you want to get out into a move to 122 or something, or, mid 122s, then that's fine. But don't just get out because you see this volume. Just trail. So if you're trailing versus low and then you're trailing versus 121 and then you see this, maybe you get a little scared, but you still just have your stop in there, and then eventually you can trail up and trail up. So I mean, no worries there. Not like that, not bad or anything. Not a bad job, but if you're asking how you could have traded it better, I would just say to practice Derek's trailing rules and watch his class if you don't really know how to trail. But yeah, just trail. You don't have to trail every single trade. You don't have to try to make every single trade turn into a forever hold or anything like that. I feel like sometimes newer traders make that mistake. I think I used to do that myself. Not every trade has to be, some big swing trade or anything like that. But just follow the game plan. Don't randomly make game plans in the middle of your trade. If you're buying FSLR down here and you're planning to get out on a little pop, then that's fine. But don't adjust your game plan because you see some little thing here, I guess is the point I'm trying to get across. I hope that makes sense, Andrew. So yeah, just make sure you have a full game plan. You got to know your worst case scenario. You got to have some type of profit target. That doesn't mean you have to sell it all when you hit that target, but you got to have some understanding of what your upside is. Otherwise, you can't measure your risk reward. And yeah, just have your game plan. I hope that helps, Andrew. Yeah, Trevor collects on YouTube. Definitely reach out to us. Reach out to Derek, or just reach out to if Derek's email is too confusing to remember, just reach out to info@t3trading.com. info@t3trading.com. And then one more YouTube question from Robert. When scalp extension, how do you prevent large loss? One big loss can wipe many scalps. What is your win ratio? I don't know my win ratio. I don't keep those numbers. I guess maybe I should, but I don't. I would say how you prevent a large loss is by making sure that you are executing on multiple time. You have the extension on multiple time frames, so that's why I was saying don't try to be a wise guy and short or buy every 2-minute or 5-minute extension, because if you could even have bad 15-minute extension but break down a daily level and things can just get worse and worse. So just make sure you have all of your time frames line up, and then what was the other point I was just about to say? And then just know the environment that you're trading in. So random extension today, in my opinion, random extension today is different than Friday, where the market fundamentally changed due to Powell's speech. And honestly, this never even really got extended to the downside too much. Maybe a little bit here and a little bit here. And even still, you still got little bounces there, right? But don't be buying on Friday. I mean, this never really even got that extended to the downside. It just kind of rode this trend in like a slow, grindy way. I remember that from Friday. But just know the environment you're trading in. Don't, if something dramatic is happening one way or the other that day, and that market or that stock's name fundamentally changed, it's different than if it's just kind of random, a random overemphasized move. So, Apple extension is usually pretty good, but if Apple reported earnings the night before, I mean, that's different. The flow of money is different. The fundamentals are different. So I guess like my main two answers for how to avoid a large loss. I guess three things. One, make sure your time frames all line up. Two, make sure you know the environment that you're trading in and like what the theme of that day is. And three, sizing. Sizing. I think all of my biggest losses pretty much ever have been because I started with too much size. So if you're like max size is 1,000, you shouldn't be starting with 1,000, and you probably shouldn't even be starting with 500, and you should probably almost never even build up to that 1,000. Like you should have a worst case scenario that like pretty much never happens. Yeah, that's like so important is sizing. It's usually those are almost always been my biggest losses is too much size too early, and trying just trying to take too much size and make too little. Don't buy 1,000 shares of SPY and try to make 10 cents and try to make a quick $100, because SPY can move really fast and be extended. So your sizing mixed with like the range you're playing. But yeah, sizing really that's like crucial, is controlling your sizing. If you're sizing, so your next question, out of 10 scalps, how many win and loss usually? Honestly, I would say I probably make 9 out of 10 times, but the amount that I make varies and the process varies, because again, I won't have an out, and sometimes I'll make like sometimes I'll perfectly nail the bottom and make like a tiny little bit of money, and sometimes I got to be stressed out for 5 to 10 minutes and be down a bit of money to make a bit of money. But that's the big thing, is sizing. If you size okay and pretty much just always err on the side of trying to size less and make less money, you will save yourself that headache where something extended further than you planned on it extending, and you can't buy anymore because you're too fully loaded up, and now you're just like praying for it to go up. So if you think you're gonna if you're gonna try to make $1,000 off a scalp, try to make 500, try to make 300. You're not gonna make as much, but you're gonna save yourself that exact scenario that I have been in very, very many times myself, where you got too much size and you started too early and you're kind of screwed. So yeah, sizing. Hope that makes sense, Robert from YouTube. All right, looks like I got through all the questions. Quick little meeting today. So yeah, that's the market. That's extension. Kids, don't try this at home. And yeah, we'll see how we gap tomorrow. I have no idea how we're gonna gap. There's some positive divergence from VVIX, but I have no idea how we're gonna gap. So we'll see how they gap us, and we'll go from there tomorrow. I hope that my little lesson helped, and yeah, have a good night. I will see you guys tomorrow.